Hi. Um, I wanted to just show you some stuff, and I'm trying to gather, in the other window. I've been noticing something, and it's a bit of a proverbial mind fuck to see it. I mean, I know that if you see it, it's going to be like this headline. This doesn't square with my reality. I don't trust it, but it's nevertheless true, despite the fact that it sounds like bullshit. Um, ICE U.S. dollar rise by 0.6%, carving out an almost 20-year high. That's the headline in a big way, and I'm gathering this stuff. So, how do I put this? Do you remember the credit crunch? There's videos up here about the credit crunch. There are a couple big headlines that I find so worrying. Global debt rises to 305 trillion, which makes me wonder, like, how is it even possible that the fundamentals justify the price of things today in a world that owes $305 trillion? um that becomes a really big question. If all this uh market activity has been basically financed in on the backs of people that owe money, that's not a good sign. It's the world is just piling more and more debt. And so what I'm saying is that it looks like Russia is going to default tomorrow, and if it doesn't, what they're saying about the situation is that it's inevitable that Russia will default eventually. And if it's not tomorrow, it'll be the next payment window, because two things changed between like the last payment, or and or at least the payment that went into default, when they went into default, and then they go into the grace period. But now the U.S. Treasury just banned them from buying um, U.S. people from buying bonds from Russia, Russian bonds, and so now investors in the United States can't buy them. And then what else changed was that the Fed is going to raise interest rates, basically. So both of those are bad signals for if the value of the US dollar goes up, since what they owe is denominated in the dollar, what Russia owes, what that effectively means is that it gets more difficult to pay because the dollar appreciated relative to the ruble, which means that basically what's going to happen is that when those interest rates finally set in, it's probably going to be bad news for these guys, for Soviet Russia, and its economy, and it'll probably default at some point. In fact, it's pretty much inevitable that it's going to default, and then Sri Lanka just defaulted very recently, and then the next thing that's probably going to happen is like Domino's, Goldman Sachs expects more real estate. All those real estate companies in China end up defaulting. I mean, it's one thing after another and after another, and then when all those Chinese real estate companies end up defaulting, what is that effect going to be, and the contagion going to be on that? That ripples outwards, because it's such a linked economy. Like, everything's so interconnected these days and interdependent that things like this and this phenomenon kind of don't have a tendency to stay in one place. They tend to spread, and if you remember back there, do you remember how just after the Lehman Brothers collapse and all that stuff was going on in this country, housing prices fell off a cliff, basically, and you were able to buy a home for pennies on the dollar, and then the government got involved, and then of course housing prices went back up. But if you had been one of the people that had money right as housing prices collapsed, you would be in a lucky situation where you could go out and buy a home for pennies on the dollar, because now they're worth nothing. But uh so I've been concerned about deflation for a while, and I've been concerned about it, and the reason and the framing that I would use to explain the reason why I'm concerned is that the velocity of money has fallen off a cliff, first of all, per the Fed's inflation numbers. The second reason that I find myself so concerned is that the world owes a record $305 trillion, which is not good news ultimately. That's a good big amount of indebtedness. And then the other thing that I wanted to point out, and this is big, I've had this concern for a long time. Okay. The recent headlines just make me think, oh, what I've been predicting for 10 years might finally be about to hit. So 10 years ago, when this all started and I got concerned about things, what I was picking up on was that unprecedented actions had been taken by the Federal Reserve. Multiple rounds of unprecedented actions had been taken by the Federal Reserve. And these were seen by people here on this platform and all over the world in all the comment sections as radical, moves that were being made by the Federal Reserve to reboot the economy and get it back online after it had basically fallen off a cliff. And then there was the talk about zombie corporations and all this stuff that went back and forth as far as the conversations were concerned. And it just got this cacophony of people that were like in an echo chamber of talking about this stuff. Well, for me, what was so like obvious was that all these unprecedented actions had been taken, and yet we looked at what the year over year inflation rate was, and it would be 0.6%. And it was like that for about right like 2000, from about 2008 to about 2022. That was about 20 all the way over to about 2020, was about how long that phenomenon was going on. And now what's happening is that there's a supply chain breakdown, and suddenly we have 8.3% inflation. But and this is like so big. Okay, the Great Depression itself was a deflationary crisis crash. Okay, that's one thing that you need to know. It was the last time the United States went through a deflationary spiral and depression. It was the last time they went through the deflationary crisis in the United States. So that, like, all the people who lived through that are now dead and gone. So most of the people who remember what it was like to live through a deflationary crisis are gone, which means that most of the market seems to be far more concerned about stag inflation from the 70s, because that's what they remember. That's what they lived through. They didn't live through a deflationary crash, so they're not concerned about defaults. They think that this isn't a big deal. They're more concerned about the stagflation reaper, whereas I'm concerned about the deflation reaper. You know, and why my concerns don't match theirs. It's like I don't know how you justify prices, because I don't see how aggregate demand is sustainable. With what's going on. I mean, if the world is if the world is indebted basically to the tune of $305 trillion, what's going to happen is that there's going to have to be a slowdown as consumers cut back to pay off their debts to their creditors, and many of them won't. Many, and in fact, whole countries won't. They'll end up defaulting instead. And all that's havoc. It's bad for aggregate demand, which is downward price pressure on everything relative to the currency. And I see this going on, and I see that defaults are probably upwards price pressure on the dollar. you know if all this, because the forex markets, right, like on the forex market, if somebody sees China in default and that's the headline, or they see Russia in default, or they see all these corporations in China that are going into default, if they see this and all this going on, and they see all these nasty headlines like Sri Lanka default, Russia default, it begins to look like dominoes are falling one after another after another. So first Sri Lanka, then Russia, then all these Chinese real estate companies, and all these corporations within Russia end up defaulting, and the contagion starts spreading to more and more places around the world. It begins to look like all the countries in the world are, there's going to be defaults all over the place after you go through 3 rounds of it, and everybody starts getting very scared, and fear begins to set in across the entire planet. And what do you see happen? What do you think is going to happen in that kind of situation? What is the flight to safety going to be? Probably into the US dollar. So, you people in the United States, they think that the dollar is comparable to monopoly money and that it's not worth anything. People in the rest of the world don't feel that way, you know. So the dollar is at, and the reason why the dollar won't go to shit despite all this money printing is that the world will start ferociously buying our money as the world goes to shit, as all the havoc and pandemonium spreads through all these defaults and all the negative headlines financially start spreading up. The safe haven will almost inevitably be our underlying currency. But yeah, I mean, look at the headline: $350 trillion in debt. Russia set to default tomorrow. And if it doesn't, they're saying in the articles themselves, if you look into the articles talking about it, that it's inevitable that they will eventually. Fed raising interest rates, Treasury barred from U.S. people from buying Russian bonds. I mean, these are the kinds of headlines that I'm reading, and I'm seeing this, and I'm thinking to myself, man, here on YouTube, almost everybody else has been betting on stagflation and a stagflationary crisis. But what if they're wrong?